it will all be about RegTech. And we heard Mr. Mersch this morning. There is, regulatory-wise, a lot in progress. And with every fintech and every new idea, there will be more regulatory. And actually, the RegTech industry will rise in the next weeks, months, and years. So, Dr. Jünemann, do you want to join me on stage? Perfect. He is financial journalist and lead anchor at Deutsches Anlegerfernsehen, and he will host the panel New Technologies Offer New Possibilities, Regulatory Tech. Give him a warm applause.
It's a long way. So, I'm followed by the panelists, and here they are.
Welcome on stage.
It's a long way. Thank you very much. Now we have to see. Yeah, carry on. We have to wait for the lady, because the lady has the choice of the seat, the privilege.
Total gentlemen.
Wherever you would like to take a seat, you take it. And I go beside you, and the rest will just look wherever they like to sit. Ladies and gentlemen, very simple. We have an interesting topic. Regulation is, if I may say that, just to introduce this subject, an ambivalent matter. I can't say that regulation is per se always good, and sometimes it can really have negative results. So let me just explain what regulation is. It's market control by governments. I mean, you can say this is something we have to take as a fact, but if we can avoid regulation and we have a technology which hasn't to be regulated, it is a good thing. So the governments, what do they want? They want to prevent market crashes when it comes to financial markets. They want to prevent disruption, which is a feature of the new industries. And it's a very complex thing. Sometimes they want also to achieve certain public interest goals. Regulation itself is an innovative process. That is important. It's a learning process, not only a machine learning process, but also a human learning process. But it is, as I said, ambivalent. RegTech now sounds very posh, but it is maybe still an empty phrase. So let's start with a proper definition. And for that, we have now a new association, International RegTech Association. And we have somebody from the RegTech Association, Dr. Michael Jünemann, just because you are guessing now that we are related. Probably we are related a few hundred years ago. But on a short-term basis, we are not related. We only just have the same surname, which is fairly rare, but still we are not related, just to say that before you starting guessing all the time during our talk. So, Michael, what is RegTech?
Trying to define the phrase, obviously, it's a bit like fintech. It is a word that combines regulation and technology. Still, I think there's still some dispute around the phrase. I recently had been to the FATF meeting in Berlin, and there was a dispute whether RegTech would be confined to financial services industry. And I think the right definition is it's really RegTech has to do with digitalizing regulatory compliance and other regulatory processes with the help of software. It's not confined to the financial services industries. There are a lot of other industries which are regulated, heavily regulated, but of course, being here today at this conference, we will probably mostly talk about solutions which are relevant for the financial services industry. So that's for the term, and I think it's fair to say that one aspect of it is data. It has to do a lot with data delivery to regulators, software solutions that work on that basis, and data analytics. But another aspect is also that some of the RegTech companies that I have seen are really trying to start mapping an organization, a bank, and as soon as there is a digital map for the organization and a new regulation comes in, this software is designed to identify as quickly as possible compliance gaps. What do I need to change? Is there any paperwork that I need to do? Stuff like that. So that broadly defines regulatory technology in the financial services industry.
Everybody is happy with this definition.
I would like to add something, because we have quite a stake. And we already discovered in the pre-talk that it's going to be a discussion. Efficiency and transformation is from our point of view, a very important aspect with regards to RegTech. A lot of people come and they have regulatory, but they are not tech, or they are tech and they don't really understand regulation. So from our point of view, it's really the combination out of both, including efficiency and transformation, real transformation for both sides.
As you have just started now, you can also introduce yourself and what you're doing, how that is related to RegTech.
I'm partner at BearingPoint in the financial service area, of course, responsible for capital markets, but also for everything around process digitalization, robotics, innovation. Robotics includes artificial intelligence. I think we will strive this at one point, and open API. So digital ecosystem management.
So Noémie, would you
for sure.
Continue?
And first of all, thank you to the European Finance Week for inviting me today. I'm very pleased to be here and be one of the women in this conference. So thank you for this invitation. So I'm Noémie Papp. I work for the European Banking Federation. I'm head of digital and retail, and the European Banking Federation represents national banking association in 32 member states. And of course, we represent 4,500 banks, wholesale and retail. And why RegTech today and why I'm here today is because digital transformation of the banking sector is at the heart of our strategy. We are focusing mainly on the 10 work stream, general banking regulation, including RegTech, prudential treatment of software, but also cloud, data, payments, cybersecurity, digital skills, and also, of course, blockchain and different topics. So very glad to be able to provide the view of the banking sector today.
Thank you very much. So Chris Bartz, he can tell us now what he's going to do, because I understand that he is asset manager and has a platform for asset management. So it's a heavily regulated item anyway.
Indeed. So Chris Bartz, I'm the CEO and co-founder of Elinvar. Elinvar provides a B2B platform for asset and wealth managers in order to digitalize their business. We do that by being a regulated portfolio manager ourselves, so that we actually combine the technical side and the regulatory side. And just to give an example of how this is helping in the field of RegTech, we have a very modern platform completely built by ourselves based on a modern microservice architecture, which brings benefits like, for example, event storage, meaning everything happening on the platform, be it on the financial side or on the personal data side, is stored in a way that you can always recreate all states in before. So that allows for a lot of data analytics stuff like machine learning, AI, and whatever you want to do in this direction. But it also allows for a lot of transparency. So it's obviously helpful in the field of ensuring that you are compliant, but also bringing compliance and regulatory to the next level. So for example, you can do back testings in order to really find out which questions are really helpful in finding the right strategies for clients. You can ensure transparency across different partners working together in an ecosystem, like who did the KYC, who did the custodian part, who did the portfolio management part, and who provided whatever data for the client. So these are all parts which connect us to this topic.
Okay, so we have learned already many opportunities with the new sort of regulation. But you use blockchain?
At the moment, we are not using blockchain.
But we have a specialist on blockchain. So, could you, Oliver, explain us what you're doing, blockchain, and how that will change the industry or is related to RegTech?
Okay, so my name is Oliver Naegele. I'm the CEO and founder of Blockchain HELIX. I'm also the guest of today's FinTech Awards, so I'm happy to see a lot of you today in my office later. I'm also founding member of the Blockchain Association Germany. What we do with Blockchain HELIX and what is related to RegTech is that we're kind of an outsourced KYC service. We provide trusted digital identities. We have a system that is not like a public blockchain. I do not want to get into technology too deep, but we have a system with governance. And we spin up a system that is combined with different parties that we call a consortium chain, combining of different parties like banks, insurers, and so on, that can simply give trust to identities. And we can combine this with regulatory commandments like audit trails or like all these different things that we see in GDPR and e-privacy right now.
Mm-hmm. I learned that the blockchain system itself is so secure with no chance to do fraud. Is that true, or is it necessary that blockchain has to be regulated as well?
I mean, blockchain itself is simply an underlying technology. Yeah? So this is nothing that you need to regulate the blockchain, but you need to regulate the companies that are actually running services. So, I mean, the blockchain itself, we see Bitcoin and we see it from 2009, and it is stable and it had never been cracked. What we see in any kind of leakages is everything around the blockchain. Mm-hmm. So you need to really differentiate this. The blockchain itself is something, if you're going into technology, it has a lot to do with cryptography. It has a lot to do with a distributed system. And this is something that from this point in time right now is the best system that we see. And the potential in the blockchain is something that we will see in the next 2 years that will arise massively. So I think that it will be the future of such systems. Mm-hmm.
IT and data collection is nothing new. What is new with RegTech nowadays? You have to analyze these data. And do the regulators fully understand what data they get and what they can do with it? You have experience with that, Noémie. Brussels is very important for all European sort of technology regulation.
Yes, that's true. That RegTech, as it's mentioned today, is concerning very different topics, as already stressed before. Of course, the banking sector is quite concerned because we are, as mentioned, heavily regulated. And then the banking sector has a lot of experience to deal with regulation and compliance. But it concerns different topics, I would say, like, of course, know your customers and linked to the anti-money laundering, how to identify customers. And of course, RegTech could help. The services could improve efficiency, also to save cost in this regard. It's also concerning big data, as you have just mentioned. Why big data? Because the point is like to collect a maximum of data to identify maybe the consumer at risk. I'm not talking here about only about anti-money laundering. It could be also when you are like conducting the creditworthiness assessment to give credit to a customer. And of course on DLT as well, we started thinking about that. Like, of course, the perspective of DLT and blockchain is more focusing on digital currency at the beginning, but it's much more than that. And we'll see like sharing information between financial institutions and also financial institutions and supervisors could be a way, and the use of RegTech in this regard could be helpful. And of course, like it's linked to post-trading and in the context of cybersecurity as well. And of course, to make sure that the data we collect also will deter the access to different infrastructure which could be put at risk, And that's why also like all RegTech solutions and services could help in this regard the banking sector. But I would say, and maybe we'll be able to develop further on that, but we still think that we need to speed up also and push the regulators to have a proactive approach and focus also on innovation.
Yeah, so that is the problem. Maybe the regulator wants to regulate something before it is innovated. How do you judge now the difference? You mentioned already, Chris, something that it is very easy now to look what's going on, and you don't need anymore the regulator to come into your house and to find what has gone on before. So is it really lowering the cost of regulation?
So indeed, I'd say if you're an optimist like I am, then you can totally envision a world where RegTech is seriously helping the entities as well as a regulator, meaning that you have a digital platform which allows you that you can analyze the data better yourself, and that you give a regulator just an API, and then he can get whatever information he needs, and as long as you are compliant, that's actually good for you, because then the data exchange gets much more efficient. The challenge I see today for most players in the industry, that they have an IT infrastructure which is so legacy driven that they are actually not able to offer APIs like this. It's rather that when, for example, I think about something like MiFID or FATCA, it took years for just implementing 1 or 2 new fields. So we have, on the one hand, a huge opportunity, meaning that you can totally envision a modern infrastructure like this, and everybody just having access to the same data, speaking about the same things, and discussions get much more fact-based and less hypothesis-based, which I think would be good for everybody in the industry. But on the other hand, you see the status quo, which is very often influenced by legacy technologies, which hinder everybody. So that actually leads to some people having a high tendencies to stay with the status quo just because they are afraid of the change. And we have to somehow find a way to bridge that. And to work with more modern platforms, because the longer we wait, the harder the change will be. Because technology, and that is something we definitely see, technology is evolving fast. And if we are not able to change to more modern platforms, then our international competitors will be. And they will have huge advantages by making a better use for their own business, but also for the dialogue with regulators.
So the challenges, who wants to comment on that? Theodor.
Regulation has cost a lot of budget throughout the last years. And obviously in the market, we have wonderful examples, a lot of them trying to make this adoption of new regulations easier, faster, better. In some cases, it's even motivating innovation within banks. But I think there is now a lot of very good examples, and open APIs give another opportunity for this. We have a lot of wonderful examples, and really making this easier, better, faster, and innovative on both sides. And let me comment on one more thing, because the previous discussion with regards to the regulator being more and more innovative. We were talking about artificial intelligence using this huge amount of data collected throughout the past years. And I think only now the technological possibilities are coming up, really ready to be used to really dig into this data with regards to cognitive computing, artificial intelligence, but making pattern recognition and maybe, and this was the previous discussion, understand the market better and better.
Yes, Michael, this is another question about the regulator. What do the regulators know so far? You have a lot of experience with regulators. Do they have the proper models? Do they need artificial intelligence to create new models because the old ones don't work anymore?
I think that's just a natural consequence of all the data collections that the regulators have invented since the financial crisis. That they also need to speed up with in their own internal systems. And as I understand, at least the German regulator has put in place new departments effectively to monitor with that. And I also recently heard a new phrase to describe that is called subtech. So that's supervisory technology. Clearly, there's also a need for them not just to kind of have their supervised entities use the new technology, but also there will be, as you mentioned, Theodor, there will be APIs, there will be other data deliveries which need to be analyzed from a supervisory point of view as well. And I think it's clearly a need. It increases efficiency, drives down costs. Also, the investment on the necessity to employ too many humans for, testing false positives. That will go down, and that will dramatically drive down costs. So, as you mentioned also, if we are not embarking on that trend, other countries will do that, and we will have a competitive disadvantage.
Oliver, the challenges.
The challenges. I think the main thing is that we simply need to think of a different mindset here. What we have right now is the data belongs to the companies right now, and legacy systems simply act very, very slow. The change is really horrible. I mean, if we talk to banks, count me out. So what we need is really a change in the mindset. If the data simply belongs to the user, and the user has some kind of infrastructure around him, like a digital identity, where we can use a service-oriented architecture, that he give access to specific services, and he can demand specific services from financial industries. Then we do not have this, what Michael just said, that we need to pick out about cheating systems. So if we come to such an element that we simply kind of skip it to the other level and get the user in a centric way, and then have a governance system on top of it, then we can simply achieve this with an enormous amount of cost efficiency, and with something that the legacy system can still stay there. I mean, they will stay, I think they will stay forever. Sometimes it looks like, but we can have a certain interface in between and then sync it to this side. So it's an outsourced service, and it's something that simply is going to the customer or to B2B customer as well, for sure. Yes, yeah. Please.
I'm happy to react to that also. I fully agree. I think now we see the approach is very much customer-centric, as you have mentioned. All businesses now are like putting customer as a center. And what I see from the approach of the regulators, of course, the first response regarding the financial services sector was to respond to the financial crisis. So that was the main angle, financial stability. But I would say, when I'm saying like regulators should be and supervisors should be more proactive, they should have innovation in mind and put also the customer at the center of their approach, because it's now what banks are doing, like they are adapting their services, their activities to the customer needs, which are like now changing very rapidly. And the objective here is like having the right framework, the right regulation, so being able to use financial technology to be compliant, and I think that's the purpose of the RegTech also, using financial technology to be compliant and also to have innovation in mind. And of course we see in different countries, different systems developing also to test this innovation and services, innovation hubs, sandboxes in the UK, Sandbox in France, and so there's a possibility rather than regulation per se and stricto sensus is like very much to think, monitor, and push maybe the different actors to collaborate. For me, it's what I see as a future as well. Perfect, collaboration.
Yeah. Fully agree.
But I have to say one thing which I would like to add. I think very often I see that the regulator is actually ahead of a lot of market players. So if you say the regulator has to do something, I'd say rather most of the market players have to do something, because when you look, for example, at regulation which came up during the last 24 months, Most of it is really driven on the European market, at least. So you really have people think about how does a single European market look like. And then you come to the national players who are used to a very national competition and have a high interest to protect their national markets. And I personally think one of the things we all should get used to is that tech leads to at least European competition and very often also to global competition. The regulator is getting this and tries to adjust the regulation, but a lot of players still have to adjust their business model, have to adjust the way they behave because everything is organized very locally. This is going to be one key challenge. And it really starts with the technical infrastructure, which is very often driven by national roots and national traditions, and it ends with the business models.
I mean, that's also clear to me. It's about setting standards. I mean, that's also what IRTA is about. I mean, trying them to lobby that we need certain standards, which at least for a single European market is required. But also, I mean, me as a lawyer looking at how regulation developed over time, it becomes more and more micromanagement. If you look at new regulation, these days it comes with regulatory technical standards, which is on one hand a good thing because it's a recognition by lawmakers and regulators that this thing is now these days it's technical. But on the other hand, it comes with very fine-tuned kind of criteria which say, well, for example, in the payment industry, if you have such a level of fraud in your system, then you can disapply or need to apply certain strong customer authentication things, which obviously is something that also requires a lot of calculation. You need to be up to speed of what is actually my level of fraud, how do I detect, how do I define fraud. All of this, if you want to comply with those kind of micromanaged regulations, it requires some form of technology. Otherwise, in a bigger organization, you have no chance of ever calculating what is actually my fraud level in reality and how can I comply with those regulations.
Thank you very much. I wanted to react also to what you have just said, Chris, because I fully agree with you. I think that's a level playing field also within the EU. The member states is very key. And we see that some countries are very much advanced also in the regulation. I would say e-identification in Germany, very much video identification is there. And in other countries, it's like very much slow, and we don't see that. And then we will see that, of course, some countries and some banks will not be able to propose the same services in Germany, in France, in Italy, in the same way, for example, because some countries are more advanced than the others. So I fully agree with you. But also just to touch the point mentioned by Michael, I think the approach also should be on having like regulating maybe more the, instead of focusing on the entity, which was the case so far, and that's why also maybe the banking sector was maybe less able to innovate so rapidly compared to their competitors, to think about like the services and the activities. So I would say that for the regulators and supervisors, the approach would be like, look at same services, same activities, same risk, same rules, and then same supervision, instead of focusing only on the entity. Because whatever it's a bank, it's a financial technology startup, or other companies, we should look at the services which are provided to the customers. Again, like I would say, the customer-centric approach.
Absolutely, and I think this connects tech very nicely to regulation, because in order to do something like this, you need a modern architecture. So when I think about what are use cases where partners are using our platform, this is actually one of them, because we are not only helping them digitalize their own business, but we also connect them to the KYC providers, to custodian banks, to market data providers, and so on. And based on our infrastructure, we are always able to ensure transparency and accountability. And you need both of them in order to make it then compliant and to make sure that you are really able to give the regulator whatever information he wants to have. And this is something where you just need very modern technology for. And then you can go to exactly such a service-based approach, which also connects very well to your vision. So I think this is definitely the future we are going to. And the question is, how do we best get there? And how do we make sure that we develop as an interesting and leading country there?
So this is an important point I'd just like to take up. To give the regulator what the regulator wants, that's first. And then afterwards, we deal with the customer. One has the impression when it comes to investment in the banking system, nowadays fulfilling the requirements of regulation, it's much more important than anything else. The customers won't get advice anymore because nobody dares to give advice simply because the regulator could make trouble. So is there a danger in this sort of development of regulation that the regulator is more important than the customer?
Actually, I totally disagree. So I think for example, I'm coming from the classical private banking area. And most private bankers I know have exactly the same interest in the regulator, meaning they want to have happy clients. The question is, but very often on the detail, and there are much too many discussion based on hypotheses. For example, if you look at the ESMA guidelines currently under review, you see that there are possible questions proposed how you can find out the perfect risk profile of a client. And I think this is just not very sensible that a regulator speculates about possible questions, someone else speculates about other questions, and then they both meet, and the question is, whose hypothesis is best? If you have a technical platform which is able to really analyze the data, you can change that to a discussion which is much more evidence-based, and you just do backtestings which questions work best in order to find out the right risk profile. And then the regulator and the provider can handle or can work based on these findings, and both can improve it because the regulator knows, okay, this provider is really backtesting, really making sure he has the best quality. And the provider, on the other side, has the advantage that he's just delivering better service because he profits from the right analytics and can really make sure that he has happy clients because he matches the clients to the right risk profile. So the interest is the same. And if you execute it in a good way, usually both are very much aligned. The problem today is, from my perspective, that we just don't have enough fact and data-driven discussions and far too many discussions based on views, hypotheses, without the right data.
I sometimes have the impression that you are right. The regulator wants to have the right risk profile of the customer. That is also in his own interest, but the banks just have a drawer, put the customer in there with the risk profile and say, now we're happy, we fulfill what the regulators is. We have not really talked enough with the customer to find his real risk profile, because people are not giving you the data you really need to analyze them properly. Is that right?
I'd say, but I mean, before having only a two-way discussion, we can include the rest afterwards as well, but as a direct reaction, I think the problem again is very often that most providers just don't have the right analytics. So you, for example, to give a very easy example, today you have a questionnaire in order to access the risk profile at the beginning when the customer first enters the bank. Then you have a customer database which is used to store the customer information. You have a portfolio management system, and you have a few other systems involved. Then, for example, the customer has something like he gets a new child. Personally, I have 2 childs. I have to admit, both childs significantly influenced my personal risk profile. If I inform my bank about this fact that I have 2 childs now, this is stored in the customer database because maybe they want to send flowers to the birthdays or something like this, but there's no connection whatsoever to my risk profile in the questionnaire, even less connection to the portfolio management system, and no connection for sure to any monitoring system, like, for example, some thresholds which should be monitored. If you have a modern platform, you can connect all of these information, and then you can do back testings and really see, okay, how important is a new child for the risk profile? How important is it for the portfolio management? So you get a much better quality, but you need the right data sets. There's actually a study from 2005 or 4 from Martin Weber from the University of Mannheim, which showed that the #1 criteria which influences the risk profile of clients is the risk profile of the advisor sitting in front of the client. This is not a good situation. But why is that? Because the client just says, okay, what do you think? The advisor says, okay, I think the following. because he does not have any evidence how to come to better conclusions. So it's very, very gut feeling driven.
Yes, now the risk profile is not anymore the advisor, it's the computer model.
No, the data of all clients.
I would say we go more and more in the direction of using robo-advisors and indeed the use of artificial intelligence.
No, analytics.
And
not robo-advice.
Whatever the terminology, because there are like many
it's just a terminology.
Like, but I would say like to identify the credit worthiness, to produce like a credit worthiness assessment. For sure, now there could be like some automated services, more and more. But of course, the human intervention will be still there, because then, if the consumer would like to have further details of why, for example, his credit application was rejected, he can always turn to a special advisor saying, okay, could you please explain more? So I think it's always a combination. In certain cases, we'll see more and more the evolution and the influence of artificial intelligence in banking. For the moment, we are still in the phase to assess, when other sectors, such as the insurance sector, are maybe more advanced in this field. But I think banks are more and more working with like mixing the different expertise and not working so much as a silos anymore. When it was the case, like indeed you were always like working on AML, then after like risk assessment, cybersecurity, also consumer credit, like mortgage credit. Now, like it seems that like there are more connection, and that's a modern bank, I would say. But of course, there's still some obstacles, because we have to comply. We have to make sure that also the information obtained are used for the specific purposes as well. So, I think you have a reaction.
But, yeah, I agree with this. I think the interesting thing is, Chris, we really need to talk later, because because what you're doing with an analysis and what we're doing with the connection point to the customer itself, or to the end user, or to the business user, this is something that we're simply doing the twist there. So first of all, we need the information. And the information is something that we really need to protect the end user. This is something that's really important, and it's something that is getting out of view very fast if you're into any risk assessment or whatever, risk management. So this is really important to have at least the customer in view about this data protection. And this is something that is really the core of what is GDPR and e-privacy. So you really need to have this in mind. And to combine these different technologies, that we have the data coming from the customer itself, and you have the ability to process these data. This is something, if we invite all these financial services to get into this boat that we're all sitting in, this is something that's absolutely powerful. Yeah?
And by the way, just one thing, I'm totally convinced that all banks want to do something like this.
Exactly.
So just to make this point very clear, I don't believe that everything should just be done by some robots, but I'm rather saying, okay, we need to have the right analytics in order to make the human side better. And most entities I know and most providers I know want to do something like this, but just have the challenge of their legacy system. So in the end, it's all about upgrading your tech, and then you can really do fintech, and you can also do much better RegTech. So that's the connection, actually. And if you don't have the right tech, then you are lost in both ways. And that's why you have to do something there.
But if you're arguing with security officers and compliance officers, it's really a challenge. Yeah. It's really a challenge. Yeah.
But to add to that, that well-placed two phrases, fintech and RegTech, because I think it's important to understand that these are two different things. I mean, data analytics can be made to put a better product to the market and address my customer individually and tell him, look, this is your risk profile, this is what you should invest in, this is what you should not invest in because of your individual risk profile. RegTech, I think it's a bit of a different perspective. It's pattern recognition, because you don't want to stop the market from developing. You cannot just simply say, if I give the right product to each and every individual customer, this is the best regulation, because then I cannot invent new products. because I don't have the regulation for it. So RegTech is really needs to step back a little bit and accept that each individual market player in for example, financial services needs to have the freedom to develop its own customer-facing technology, make his own offers, redesign them, and then RegTech comes in. Question is, what data do I need from this new product? Understand it, pattern recognition, see the risks, and then the regulator can decide whether that new product can be rolled out as such or can be continued to be offered.
Actually, I disagree, because good regulation is not product-based, but is principle-based. And if I have the right principles, there's actually no contradiction between the two sides. So, for example, I'm in the advisory board of the Ministry of Finance discussing how can we best regulate for what we are seeing now and the developments in the future. And one key thing is you should do regulation tech neutral, and it should be principle based. And if both are the case, then there's no hinder to innovation whatsoever, but you can rather just innovate. And as I said, the basic idea of regulation in the most fields I see is to provide better solutions for clients and to make sure that the clients have their right in the market. So the interests are very much aligned there. So
it's an important point. Principle-based. I think this we have to discuss further on. What is a principle, for instance, in investment, which the regulator has to focus on, and how is that then used in the market?
And I agree, like to be technology neutral is extremely important, because otherwise if you wait for the regulation to be put in place before launching your product, you risk to not be able to launch innovative products and then to be in a uncompetitive landscape. And I was like, that would be a risk also that regulators have to keep in mind, and the right balance has to be found, I would say, and technology neutrality is extremely important, and I agree with your point.
As a long-term observer of the financial markets, or the stock market especially, I know that there are certain developments which nobody has foreseen with the best sort of technology. And the thing is, if everybody does the same, it could be sound, in principle right, but it could end in a disaster. So maybe you totally agree, but I'm convinced with that. I have
I agree.
Had a lot of crash experiences. So in what way we can really then prevent the regulator to do too much regulation? But so far we have taken all this regulation as given and sound and sensible. Is it really sensible?
But that's exactly what I meant. So I totally agree in this case, agree with you that, for example, if everybody would execute the same investment strategy, it would just not make sense anymore, because then the best investment would be against the rest of the market, because you have like a proven win. But that's exactly on the other side why I think it's so important that you have more fact-based more data in order to come to the best regulation. So for example, if you say the regulatory ambition is you want to have a risk profile which fits to the client, that is something which is totally fine. Simple. If you then have good data in order to prove in backtestings which questions help you to lead to the best solution there, this can actually be something which is different from bank to bank. So there might be someone who provides investment strategies with a high focus on sustainability. So it's very likely that he needs different questions in order to find out the perfect preferences of the client regarding sustainability, compared to someone who has a very high focus on value at risk. So I can totally see that the goal of the regulator, okay, you need to make sure that the client ends up with a strategy that fits and a risk profile that fits to him personally, is then different from provider to provider, depending on the investment strategy of each provider, And the advantage is even there that you can come up with better solutions and also prove that you were working in the best interest of the client, because the decision of the client to come to you as a sustainability expert is step one. Step two is you are regulatory compliant because you can prove that you really match clients perfectly to the right sustainability strategy. And this is still totally different from a different provider with a different market approach.
I preached with investors always, never buy something which you don't understand. At the moment, I have sometimes the feeling that they get something which fits you perfectly, but they don't understand it.
I wanted just to react to your point, more your point about like how about the prevention of having more regulation. I think it's not really about like having regulation, which is a problem. I would say it's more to have the right framework to make sure that it's adapted to the digital reality. And what we see with RegTech is like to how to be able to use those new technology to continue to be compliant in the best way, in the most efficient way, and less costly way. I don't know, Michael, I guess, or even Theodor, you might have some feedback on that, because I would say it's not really like to prevent regulation, but to have the right framework. So depending also of what is needed. And technology neutrality is a principle of same services, same risk, same rules, same supervision, and also the customer-centric approach should be, in my view, maybe the approach we should take here. I mean, the regulators should take.
I just take the microphone because we have less than 10 minutes. Maybe there are questions. You're right? Or you want to add something at the moment?
I would add in many cases the regulation was even, surprisingly, even supporting innovation big time. So there is regulation that was forcing innovation to come up. So this, from my personal point of view, is a very important point. Sometimes it kind of has initially the feeling it hinders innovation a little bit, but as of now, all this RegTech thing is due to regulation, just because.
So, are there questions, or are you confused, maybe on a little bit higher level than before? Are there questions? No? Oh, yes. Yeah.
Stefan Wolf from Santander, Germany. Hello. Maybe to Mr. Naegele and Mr. Schabicki, a question. As a bank, we still have to fulfill a lot of compliance and regulatory reports, IRB, under credit, Bundesbank every month, blah, blah, blah. So what is your vision on the future? What can technology help us a little bit to overcome all these efforts we have, a lot of data silos to fulfill each and every regulatory requirement? So what is your outlook on the next years? What can happen? Will we be able to reduce the silos to only one?
I have a twofold answer. One thing is, we see this now with a few clients with regards to regulatory reporting, it's creating a huge data set. And this is a perfect precondition to really dig into it and maybe identify interesting information. So somehow there is here and there the idea to take another profit out of it. So this is one thing. The other thing is, with regards to open API, my hope is that a lot of banks will open up to open API strategies and really think about this. And in one or the other case, it will be much faster to add a module somewhere, shoot the data in there, get the results back, and maybe send it to ECB or whoever. So in order to make it quicker, more efficient, less expensive, and so on. So this would be two trends I see. One is really taking advantage out of regulation, and the other one is that from an architectural, structural point of view, things are faster to adapt.
Okay, so our vision here is to give the regulator access to certain audit trails that are simply in the system itself. So with this, you have transparency for all different market players. You have a system that can still provide privacy, so we can give certain access to information for a regulator in this case. And this, if you establish a standard for such a system, to lower the cost for all these different market players, and then to fulfill all these commandments that you have to the regulators in a very, very easy way, because you're simply, as you're getting into standards, you can simply you can save a lot of money there, and all these silos is something that we have a project in order to outsource this technology and to sync to different silos, then to transform this to better data quality. Yeah.
I would also have a hope that regulatory technology may give us an opportunity to go back from what we have experienced now as a move from qualitative to quantitative regulation back to qualitative regulation. So if the supervised entity can demonstrate to a regulator that they have the right technology tools in place to comply with regulation, that the supervision is reduced again to supervising, auditing the tools, rather than collecting all the data from all market participants, which will not go away anymore, but then really a quantitative regulation, which we are really trending towards, that this may be an opportunity for all market players to get back a bit from this qualitative regulation, and thereby also have more freedom, as I mentioned, to do new things, because it's then again about qualitative internal audit trails, processes, self-interest driven control over your organization, rather than this external control mechanism that we have now in these days, more and more.
This was really a last perfect word. We have still 2 minutes. So if there is another question, wait a second, I come to you. Yeah. So, it's you.
Reinberger, GreenTech Capital. I rather tend to disagree with your assessment that regulating is, or basically a sounder regulation is pushing innovation. The opposite is true. We all know that. I think we have to distinguish here between collecting data, as you said, quant. We have various sources of data collecting or requirements all heading into the same direction. And whoever you are, if you're a financial institution, to provide all these data, I can see where you're bridging the gap in order to sort of, technically speaking, provide the data. But it comes down to the point that most of the time, from the side of the regulatory body, no one really knows how to analyze these data. A good example, if you look, for example, like FSE in London, they are a mass market or a quant monster in collecting data from all the participants. They don't have not the capacity in terms of manpower to analyze these data. They're keen in getting everything. They want to know everything from their participant, which is difficult. If you look in terms of burden, also financially, financial institutions have in terms of fulfilling all these compliance requirements with these people, manpower, this is just headache.
I just might add a quote from Axel Weber, the former president of the Bundesbank. He said 2 days ago, honestly, we do not have the models to fully understand the financial markets. So, who would like to comment on that?
That's a great risk of disappointment, also of kind of voters. Mm-hmm. That with all the collection of the data, the expectation now is that never ever a financial crisis will appear. Regulators are fully on top of what's happening, They have everything under control. So I mentioned subtech. Let's see how much subtech will be used. Human resources are limited. So there's a great potential for disappointment. I would urge the regulators and also the politicians to address this. And obviously the answer would be, as I mentioned before, a bit putting the burden back to the financial institutions, saying, well, you need to find your own software tools, etc., to monitor yourself in a way which is sufficiently enough to address the risks.
I think what's really important is that right now, if you're dealing with regulator, it's like going to the dentist. It's something that you all fear, and it's something that's really, it's not really comfortable. So I think that it needs to be a service. It needs to be something that speed up innovation, speed up trust in systems. So I think there's, we have in different countries, we have sandboxes. We do not have this in Germany right now. I think the regulator need to transform in some other way as well. So I think this should be done.
So I think, thank you very much indeed. This was very important and illuminating insight on a very complex topic. And if I understand now, thank you very much indeed. If I understand now, we should give the customer what they really need, and most of you probably need lunch now. So have a nice lunch.